Societe Generale, one of Europe's largest financial services group, reported its 2018 full-year results. Frédéric Oudéa, hello and welcome.
Hello.
You're the CEO of Societe Generale. How did Societe Generale perform in 2018 and what's the latest on the execution of your strategic plan?
First of all, if we look at the results themselves, I think we have posted robust results. First of all, growth of net banking income in a difficult overall environment, good monitoring of the costs in line with our expectations, low cost of risk reflecting the quality of our assets. All in all, a net profit of 3.8 billion euros and an underlying profitability of 9.7%. So, I mean, something robust, as I've said, in this environment. When we look at the different businesses and effectively also at the first year of implementation of our strategic roadmap over the next 3 years, what is positive is that most of our growth initiatives have delivered. In particular, in the retail activities, whether they are in France or even more internationally and in financial services. And when I look at the wholesale banking activities, we've had very good results in all the financing and advisory activities. It is fair to say that regarding the capital markets, the results are more disappointing and below our expectation, in particular because of a fourth quarter which was very difficult, with very difficult market conditions. Beyond the trajectory of each business in terms of NBI, where I also see positive results in the delivery, it's regarding the cost. We are in line with our cost efficiency plan. The cost of risk is low, reflecting again the good quality of our assets. And fundamentally, we have also delivered largely in our disposal program. All in all, I think it's a positive first step. Now, at the same time, it is also fair to say that the environment has changed compared with the way we were looking at the world 15 months ago. First of all, the prospects for growth are lower. It started mid-2018 with question marks on China growth, with trade wars worries, and then it also disseminated in the Eurozone, for example. Second, the geopolitical uncertainties are much higher today overall than just 15 months ago. And also very importantly, when I look at the regulatory framework, we have the confirmation that in Europe there will be further constraints going forward in the coming years, both in terms, for example, of capital requirements, but also with regulations such as MiFID II. So we have to factor this environment, this change in the environment, structural environment, in our future plan and take that into account.
Can you tell us how the execution of your plan is adapting to this deteriorated environment and what actions are you planning to achieve it?
First of all, this change of environment does not change our ambition to build in the long term a strong European banking group, a diversified banking group, which is committed to accompany its clients in their positive transformations and more generally our economies, and being able to deliver a sustainable and responsible growth with, of course, a sustainable profitability. So this goal has not changed, this ambition has not changed. Now, if I look at the shorter term and look at each business, there's no reason to change what we are doing in the French retail, pursue this formidable transformation with the digital technology, adjusting all our setup in terms of distribution networks, and being committed to help our staff in the new jobs, in the new functions. We, of course, factor the lower interest rate environment in our financial revenue perspective for the next 2 years, the short term. Regarding international retail and financial services, as I've said in commenting on the results, here it's just a bright spot and we need to further take advantage of our leading franchises, putting capital at work, taking advantage of our positioning to conquer more clients and of course innovating at the same time also, for example, with new technology. Regarding the wholesale banking, we want to pursue the development of our financing activity which are geared towards our corporate clients, accompanying these clients in all their international projects, in financing also infrastructure, etc., which are growing areas. And it's fair to say we are adjusting in our capital markets strategically to take into account this environment going forward. We are going to refine the capital allocation, focusing this allocation towards our areas of excellence, such as the distribution of structured products, such as our prime brokerage activities, such as our ETF activities, and then refocus areas where we make less money or areas such as fixed income and currency where there is less profitability today. Second, we want to have more efficiency from all our resources, and effectively by upgrading this efficiency, breaking further silos, focusing on the similar client base, we want effectively to be able to save something like 500 million euros of cost in GBIS to improve the profitability. So this is the area where effectively we are adjusting the strategic roadmap for the next 2 years. Beyond what each business will deliver, we are also comforting our capital trajectory. It's very important to be very solid. We maintain the same Core Tier 1 target ratio, but we give even more margin of maneuver for the next 2 years to reach this target, in particular by enhancing the target of our disposal program. All in all, what I would like to say is my confidence in our capacity to deliver this first step of a long-term transformation, strategic transformation in a very different environment with different client needs. I'm very confident that the next few years will be a step towards an even more robust, an even more impactful business model, and of course, with a strengthening of our structural profitability.
Frédéric Oudéa, CEO of Societe Generale, thank you very much for your time.
You're welcome.